All right, so yesterday produced a bit of a warning. My original expectation was that we would get a half cycle low and then at least test these all-time highs before moving back down. Now, there was never really any chance of a sustained breakout above these all-time highs, but up to Thursday, it looked like we were set up pretty good to at least test them before we started down into an intermediate degree correction. Then we get the big sell-off on Friday, and then yesterday um, the stock market opened below 2,800, and it also closed marginally below 2,800. So, and also it has closed below this intermediate trend line. So that's a bit of a warning that this may be um, something more severe than just a half cycle low, and and we bottom and we head back up. It's a potential warning sign that maybe the intermediate cycle has topped right here. And if that's the case, then it's possible that we're forming an inverse head and shoulders pattern. Let me widen this chart out just a bit. Um, okay, so this would be the left shoulder, the head, and presumably, if we did form an intermediate top, then you would expect the right shoulder to maybe come down a little further down into this 2600 level, and that would give us our intermediate decline. And then at that point, then we would have a much better chance of getting a breakout above, a sustained breakout above these all-time highs. Like I said, we were never going to get a sustained breakout above this during this intermediate cycle anyway. So, you know, probably the maximum target would have been right here. But a bit of a warning sign yesterday that this might turn into something more than a half cycle low, and we might have to wait a little longer before we test these all-time highs. So my recommendation um, to subscribers is, we made just an insane amount of money on the oil trade, over 80%, and I suggested the other day that, actually, let me switch over to oil. All right, so on this day right here, I suggested, anybody, anybody that felt inclined, um, I was going to give my blessing to go ahead and take profits on the energy trade. We were getting pretty close to the 200-day moving average, and that was kind of my maximum target anyway for this first daily cycle. I didn't really expect we would get a sustained move above the 200. I thought, and I still think there's maybe a decent possibility that oil could test this 200-day moving average before this first daily cycle tops. Um, but as you can see at this point, there's not a whole lot of profit left. And if this does come up a little bit short and it doesn't quite make it to the 200 before moving down into an intermediate or a daily cycle correction, um, and we get something similar to the stock market, maybe an inverse head and shoulders pattern, then you could get a pretty good pullback, something back to down to 55, or even back down to this 50 zone during the first correction before we get enough um, potential to break through this 200-day moving average. So at this point, it's like I think you can just go ahead and control greed, take your profits, be happy with what we did, and then just wait on the sidelines until we get the correction. It's not terribly important to catch the last $1.50 of this rally. Uh, uh, there's a chance that this could top slightly before hitting this 200-day moving average. And so, just like I said, we made 80% on this trade. We got in down here um, in a leveraged fund, and 80% is it's enough. You don't need to be excessively greedy at this point. We're close enough to that target. Um, you just there's just no need to keep pushing and risk getting caught. At some point, there is going to be a daily cycle low, and my recommendation was just go ahead and lock up profits. These are realistically, this trade, you could be done for the year. You don't need to do another thing for the rest of the year after this trade. So, at some point, there's going to be a corrective move, and then that's your opportunity to get in again, not to keep pushing this all the way to this target. And if it comes up short, then you get caught in a correction. Um, so, at this point, a couple of warning bells may be going off. Not a lot of profit potential left, in either market. We've got, a few dollars left to this 200-day moving average in oil. Probably not worth trying to catch it. And not a tremendous amount of upside potential left in the stock market either. Maximum target is going to be here at 2940-ish. We made it to 2850, so less than 100 points left. And now we've got some warning bells possibly going off. So again, not a lot of potential left in this market. Is it really worth possibly getting caught in an intermediate decline if that's what's happening here? If this intermediate cycle has topped, and something I noted in one of my reports the other day that this intermediate cycle, let me widen this just a bit. All right, so this intermediate cycle here ran exceptionally long. That's why we got caught. It had a fifth daily cycle embedded within this larger intermediate cycle. So this ran, almost a year. This intermediate cycle ran almost a year. And very often a long cycle like this will be followed by a short cycle. So this cycle here had 5 daily cycles embedded within it. It's possible that this cycle will only have 2. And if that's the case, then this daily cycle that has just begun would potentially roll over in a left translated pattern. And we get our move down to maybe, like I said, maybe this 2600 level, and then that's our bottom. And then at that point, we would take off to the upside. But again, we were never going to get a sustained breakout above this during this intermediate cycle. So, just not a huge amount of potential left in this market either, the same as oil. And there's going to be another great opportunity at the next intermediate cycle low, either in stocks or oil. And so probably not worth risking getting caught if this cycle were to left translate. And better to just play it safe, wait on the sidelines, and wait for that next intermediate cycle low. And it doesn't matter if this does recover and comes up to test these all-time highs, or whether this is rolling over and starting an intermediate decline now. Either way, it doesn't really matter. There's still going to be an intermediate degree correction sometime in the future. It'll either come end of April, beginning of May, or it'll come in July if we do recover and this ends up having 3 daily cycles in it instead of 2. But if it only has 2, then we're going to get an intermediate decline here soon, and we'll get our bottom in late April or early May, and that'll be your opportunity with a lot less risk and a lot more potential. At this point here, there's just not a lot of potential left between here, and there's starting to become become a lot of risk if this has topped. So for us, it was time to control greed. We've made, a really a ton of money over the last 2.5 months, enough money to where we really don't even need to trade for the rest of the year if we don't want to, and we certainly don't need to press a trade, in this position that's just running out of potential and starting to become risky if this is possibly an intermediate top that is forming.